Got to move on to Salesforce because we're going to run out of time.
Oh, okay, yeah. I forgot. See, a week gone. I forgot that we do Salesforce at the end here. So let's look at Salesforce. Their symbol is CRM in the industry of software applications. We do see short on the shares is only 1.4%, so not many people shorting the stock. I thought maybe the pullback would be a buy here, but right now the PE ratio on the last 12 months is a 43. That is below the industry at 89.8. Price to sales 6.9 versus 7.1. Price to book value 4.3 versus 7.3. And price to cash flow checks in at 20 versus 33. They do have a PEG ratio looking pretty good of 1.3 versus 14. Now, their earnings over the last year did climb by 14.9%. That is better than the industry at 10.8. Sales are up 8%, not as good as the industry, up 10.6. The analysts do give them a 5-year earnings per share growth rate of 18.7%. Almost 3 times the industry growth rate at 6.7. Now, they do pay a small dividend as 0.6%. Surprise, the payout ratio is 25%. So as small as that dividend is, they do use 25% of the earnings to pay that out. That's a little bit lofty for me. Well, I was surprised there. Balance sheet, current ratio 1.1 versus 1.9. Debt to equity, very good. 0.2 versus 0.5. Not much debt on the balance sheet. Do have a lot of intangible assets, so 56.1 versus 35.5. We do see a net profit margin, 16.1% versus 10.5. So for every dollar they bring in, they keep about 16 cents off that dollar. Return on equity looking okay, 10.2 versus 15.7. Return on invested capital, 8.6. And free cash flow is very good, though, $12.6 billion versus $2.9 billion. Jace, what do you got?
As our current price here for Salesforce is $274.51. Again, their ticker symbol CRM. The 52-week range, $227.77 is the low. The high here, $369. So that's why I know you say you're a little bit disappointed on the valuations, even with the pullback. And I'll kind of double down on that disappointment because if we go forward to this January 2027, I see estimated earnings per share here of $12.63. I mean, it gives us a target sell price of about $209.66. So it still trades over 21 times those future earnings. I mean, it's expensive. And, you know, I got to say, it seems like they're almost going back to their old ways. They just announced a purchase of this company called, I never even heard of it before, Informatica for about $8 billion. So, I mean, a decent size acquisition here. And a couple analysts really didn't like that. They downgraded the stock over concerns with execution risks if the company continues to acquire other businesses there. It's hard to integrate companies into a company here like the size of Salesforce. So, you know, I definitely don't like it given the current valuations for Salesforce.
In my 40 years of managing money, I have seen where companies say buy, and then like 5-10 years later, they got to divest things so it didn't work out. Yeah. And that's what worries me about a company doing so much in the acquisition side. It could cause problems down the road.
And I still don't even really know what Salesforce does. I know they have the CRM and we use Redtail for our personal CRM system, and we used Salesforce years ago. But I know they are in the agentic AI is what they call it, where they have the agents to do the AI. I don't know how that all plays in. So if you held this, you have to know what the growth is for this potential business, given the lofty valuations.
What do they really do? That's what I want to know. So, all right, we're going to take a quick break here. When we come back,